Stanley Druckenmiller puts it this way.
I have found it's very important never to invest in the present. Always try and envision the situation as you see it in 18 to 24 months, and then see if you feel things will be differently than they are now, would security prices reflect that? I think that's probably the biggest mistake investors make, is they invest in the present rather than forward-looking and looking where the puck's going instead of where the puck is.
Now, hold on a second. He's got a quite large time horizon, and he's talking more about investing rather than trading. But this is true in trading too. It's true on all time frames. Whether you're looking at a couple of days or a couple of months, it's all about where the sentiment is going. For instance, let's picture this. EURUSD is dropping like a rock. So at that point, most traders are most likely thinking, well, I can buy this cheap. They should reverse. I mean, look at how oversold it is. But hold on a second, because let's take a second and deeper look at this. Because this is where you should ask yourself, why is EURUSD dropping this hard? Because when you understand the why, you can project to what's next. And this is where fundamental analysis becomes useful. So yes, EURUSD is dropping like a rock, but why? Now, this is a bit of an extreme example because this is November 5, US election day, and Trump just got elected. So it's not the regular FOMC type of day, but this is perfect to prove the point. So you see the move, you take a step back, you think about the fundamentals, you do your research, you understand Trump just got elected, and that's where you realize, okay, Trump is notoriously hawkish on trade policies, he wants to impose tariffs, hawkish trade policies are bullish for the dollar, and maybe you don't realize this yourself. But if you follow us on our Telegram channel or on our Substack, you would have known that because we briefed on it before the election and also after. So we made sure you got the context right on what Trump actually meant for the dollar and for the markets. Basically, that's a simple way to say that you don't need to be a fundamental expert to do some proper fundamental analysis. You can just get it sourced by the right traders that know it better. And that way you do it smart. But with that said, let's get back to the example. So the narrative becomes clear. This isn't just a random drop. It's a fundamental shift. And because of that, the move is likely to continue. So suddenly, you've gone from trying to fade that move just because it looked overextended on a chart, no understanding of the context, no knowledge of what was going on behind the chart, to instead actually understanding the real reason behind that move, and thanks to that, understanding that this was a start of a trend. So, now, do you really want to fade that? Well, no, in fact, you should do the exact opposite. And that's what we did. We saw exactly what was going on fundamentally. We knew exactly that was going to unfold over the next couple of weeks, and in fact, that's what it did. EURUSD kept trending lower, all the way to the expected target. Now, this is fundamental analysis. It's not about squinting at the charts and guessing if it's going to bounce or not. It's not about knowing all the economic data around. It's about knowing the story behind the move. Whatever it is, you need to know it. Why? Because when you know what's going on, you can evaluate whether it should continue or not. So essentially, when you take a trade, fundamentally, you're essentially positioning for a specific narrative to keep going or to reverse. Basically, I believe this trend will continue because of such and such narrative. Or, I believe this trend is a fad, the narrative won't hold, so here's why I'm fading it. And that's what fundamental analysis is. That's exactly what it is. It's about pulling back the curtain to see what story is driving the market. Central bank's policy, geopolitical events, risk sentiment. Just know that narrative, because with that, you can begin to rationally and logically analyze whether that story should continue or not. And at that point, you are no longer just reacting to the market. You're not just seeing the market as oversold or overbought, but instead, you see the driver and the sentiment behind the chart. So you're picturing how that sentiment is going to unfold over time. Seriously, think about it this way. Fundamental analysis helps you paint a picture of where the market is going to be. It's like Druckenmiller said, we're trying to envision where the world is going to be and invest in that. So that's his version of how to invest, but in the shorter term, simply try to envision the context as you see it in a couple of days, 2 weeks, or whatever your time horizon is. In simple, build the narrative, whatever it is the time horizon, know what the market is going to trend to, and again, you don't have to do that all alone. If you don't have the experience, Don't try to make up the narrative out of nowhere. Seriously, the smartest traders I know are fully aware of what's in their field of competence and what's not. So if you can't understand what's going on fundamentally, then ask someone that does. Read about what's going on. Do some research. The point is, the next time you see the chart moving, whether it's a rally or plunge, pause and ask yourself, what's the story behind this move? What are the fundamental drivers driving this sentiment? Two very important questions that lead to the next question, which is this story and sentiment likely to continue? If yes, you've got a trend to ride. If no, you've got a trend to fade. Now be careful obviously with the trend fading, it's always a little trickier, but you get the point. That model is how you go from guessing based on a chart pattern or, oversold and overbought level to instead making informed decisions based on real macroeconomic drivers. Data plus narrative gives you the best and deepest possible understanding of markets.